Retail wants that short, and they are willing to be wrong 500 times out of the one time that they do predict the correct reversal. We are willing to be correct every single time, and we're willing to be wrong at the very end if a market actually wants to reverse.
Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility.
Hey, how's it going, guys? Welcome back to mentfx, and in this video we are actually going to keep it short, but we are going to be talking about a synopsis, and what we're going to do is this is going to be the finale of the last few videos that we've put together to really cement and take home this idea that when you have structure delivering, you should expect that trend to continue without any reason for falter, right? And what I mean by that, and as you guys know, in my last few videos, I've spoken a lot about UJ, right? I've shown you the webinar where I spoke about UJ, and I even, I basically said we're going to be bullish on this move ever since this area here. Ever since these accumulations from the S&D points, the last down moves, 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 ever since we spoke about these accumulations, these protected highs or protected lows being created with every step in the process and with every new structural break, we spoke about it then continuing to run highs, and as it ran those highs, we spoke about it continuing and continuing and continuing, because when a bullish bias is put in motion, the reality is that should remain. And when a new structure, right, is put in motion, that structure should remain whether or not it makes its move back into an area, right? The likelihood, as like we like to speak about on this channel, is to make a small pullback and continue, make a pullback and continue, make a pullback and continue. Sometimes we'll make a deeper pullback, sometimes an even deeper one, right? So people in the mentorship know MB1, MB2, you know what we're following here and why we're following it, right? Continuation, pullback, continuation, etc., right? And that's how we view price delivery and how we expect price delivery. We know that we can get involved in moments like this. However, we're also aware that on lower time frames, as we look inside of points like these, right, and we go and prorate that to a lower time frame, that's kind of like a dick, so we're going to get rid of that. But we know that over time, as we look inside of these areas, we're going to see those lower time frame structural impulses and ranges or 3-box criteria being met that allow you to get involved and take yourself to the higher time frame, right? Running a new liquidity. But what's beautiful and what we've spoken about is, we finally come to fruition on this, 5.5-year range, right? We had this original structural break right here, and we found our last down move before that up move, which was, you can see this black candle right here, extended to its wick, and then because the wick is lower, we know that that's the refined S&D of that move. We draw that out. Price beautifully holds our S&D up, creates its accumulations on a higher time frame, accumulations on a lower time frames, overall makes an attempt to run to the next structural liquidity point that is holding this range, and where smart money is protecting their low at these points here. As it protects those lows and buys into huge positions in these areas here, it takes price higher, and as it does that, it doesn't make all the deep pullbacks into certain zones. However, as it makes that run now, it also creates a lower time frame, aka the daily in this case, small moments of accumulation and structural delivery for smart money to get positioned once again, right? Like you can see, no entry, boom, beautiful S&D entry, continuation that just runs and runs and runs, right? Then we have it again, beautiful entries, beautiful entries, beautiful entries, some of them that then get ran, right? We have liquidations, that's normal, that's how we teach on this channel, right? New structural shifts to the top side. Once again, S&D is holding beautifully, creating those small moments in price where you have that last bit of smart money that get involved, and once again, the runs, and once again, the areas that I spoke about countless times on this YouTube channel now and within the private mentorship over the last 5-6 months, where I basically told everyone from this impulse here that we should be heading higher, and from where we're going to be doing that, we began to run the liquidity on the top side, ran the liquidity, came into our zone, ran the liquidity, and those last points of being able to position then exploded into this beautiful run on that weekly liquidity, right? Because remember, we're part of this weekly trend, and since then we've been running that because the market has given us this bullish accumulation, and that bullish accumulation now needs to come to fruition. It needs an area to take that liquidity, right? Whether it be at that high, these highs, this high, and now more likely than not, right, we're continuing to just do this and do this and do this and probably head for, potentially even these highs here. They're far out, of course. We might see some final stoppage at these points eventually, but The reality is, because the market is bullish, there's no reason to force bearish. And what's even more interesting at this given moment, if we just go to like the community outlook, right, on normal FX book, right, and you just look at this, it's hilarious, right? Most of retail is still 80%. 80% of most of retail is still extremely short on this market, right? A lot of retail mentorships or signal services, whatever it might be, are very short on this because, again, when a market becomes more and more overextended, retail is more likely to try and force any trades on the opposite side of that. Whereas everyone in my mentorship, in the smart money space, right, or at least in my smart money space, we call it that, because there's a lot of stuff out there that's more on the dumb smart money end of things, right? Is looking at this to continue long ever since it broke higher, right? Everything has just been delivering long. Even at the beginning of this week in the webinar, we're like long. It's long. There's no reason not to continue long, right? It's better. Here's something that you should write down. It's better to be wrong once at the very end of the trend rather than be wrong at every single high point ever created. Right, because what's happening is a lot of retail has been trying to call the high of this market ever since this big rally here. Right, so what's happening is a lot of retail sees this rally here and they go, that's it. There's no way it can continue higher. And this is already a daily, right? Which means that a lot of people are not just on the daily. There's retail that's looking at this on like a 2 hour. And at that point, right, this for them is an extremely overextended market, right? A market that's gone too long. The trend lines are officially starting to fail. There's no way this can hold. It has to go short. Support resistance is starting to fail. It has to start bouncing and going short. There's no way that it continues long. Their RSIs are out of control, just overbought for the last 5 months, whatever it's been, right? So on a 2 hour, this market already looks beyond overextended, right? On a 30-minute, 15-minute, this market is like there's no way the market can continue going long, right? That's how a lot of dumber money or psychologically poorly affected people, or dumber smart money, or a lot of retail. Now again, it's profitable. You can still be profitable being on the retail side, and there's still people being profitable on the short side within this market. However, the underlying condition and the whys as to how they're creating these biases are flawed, right? There's a lack of understanding as to why price may be wanting to go long in this case, and how it may want to continue, and what it's looking to run as it does that, like every single one of every new created high, because currently the market is in a very bullish status, right? So let's just remember that across time frames, especially below the daily, which a lot of people do, even if they're day traders, are looking at this market as an extremely overextended market, right? And now we go back to the daily, right? Remember how that 2 hour looked for a second. And this market looks beyond overextended, and finally it's coming down, breaking structure for a lot of people. Again, this is fake structure that we don't deal with because we understand where we are in the overall picture. So we either are following new displacements on a lower time frame as smart money followers, or we're waiting for that new footprint to come in motion, right? So a lot of retail or dumber smart money is already looking at this right here as a complete overextension of this market. And a lot of them are expecting that there has to be a short in motion, right? A lot of people are looking left, which is something that I teach you guys not to do unless you're looking for that one impulse that you're in. And once you find that impulse, such as, low to high, that's all you should worry about. There's nothing else to look left for. What a lot of people are doing is they're looking like as far left as they can, going, support, resistance, support, resistance, right? And this area is looking very jam-packed. So when they see this overextension, all their minds can kind of seek towards is this idea that, oh, we're holding this resistance, we need to get positioned short, right? It comes up, they fail to get in short, maybe they start getting in long, now they're getting back into short. Where do you think all stop losses are being placed? Clearly, most of some stop losses are randomly placed all over these areas here, of course, because that's how, we can't always know where stops are, but main stops, especially from people that are really gambling in on this, or like dumber, smaller banks or smaller hedge funds or dumb hedge funds are piling into this with stop loss protections up here, because in their mind, there's no way that we continue, especially since we're holding this very high key level. Right, so a lot of people are getting in this. Remember, when I say retail or dumb money, I'm not talking about the average Joe like me that's in front of their computer doing this. Again, they make up a part of that, of course, but for the most part, what we're talking about is money that sees a certain move or sees a data point being held and instantly thinks that that's a reasoning for a very long-term short bias, especially with like a break like this. And, whether you're doing that on a chart or you're viewing it in the order footprint, right? Or like the order flow booklet, or you're looking at this from a fundamental perspective, what's happening is even fundamentals draw their data and their suppositions from the numbers on the right. They draw it from data points, right? They need data points to basically decide whether something is overextended or not overextended enough. And for them, this is clearly an overextended move, so that's where they're trying to get involved in shorts. And as they do that, everybody's getting kind of tunnel visioned into this idea of shorts. It's breaking down shorts, it's confirming the shorts. Everyone's getting involved. Their stop losses just above wherever they can, with most stop losses being placed here. And lo and behold, everyone in the smart money sphere, or everyone in at least, we could say my mentorship, or acting under the philosophy that's being taught here on this channel, is looking at this as basically like the fluff structure until those longs come back in, because we are aware of where the price is coming from and what price is most likely to be doing. And this is a daily chart. Keep that in mind. So as price, let's replay this now, right? So as price begins to now re-put in this bullish structure and this bullish price action, right? What's occurring is, once again, a lot of the people that had this area drawn in prior are now being even more convinced in their point, right? They might get taken out here. This is where some hedge funds lose a good amount of money, maybe a few million. It's all good, right? Because, they know what they're doing, so, investors are going to give them more money. And as it starts going short again, the same thing is happening, right? Starts holding highs and going short. A lot of people are looking at this once again as, oh my God, the bearish zones or the bearish levels and key points on this high time frame are holding, and they want to keep holding. They're building that move down, and this is a lot of hedge fund or dumber money, dumb retail, whatever you want to call it, getting involved in those shorts when the market is clearly already showing you wants to go long. And as that's happening, smart money is looking at the immediate moves of structure and the immediate showcase that price wants to go to a certain direction, and looking at the immediate manipulations that need mitigation, like this guy right here, right? Structure, S&D, confirm, and as price gets here and those last bits of dumb money is piling into more shorts here because it's breaking more structure to the downside, holding more inside resistance on even lower time frames, right? There's even more resistance in here that people want to get involved in. There's a lot of reasoning for retail to get short. This is why over the last few months, retail, UJ, right, has been very short. 80% of people are mostly short on this, right? Not, you cannot lie with the statistic here, right? And we've been long ever since that video I even released for you guys on my public YouTube. And as a result, all we're doing is following that bullish structure, looking for the liquidation of all those shorts. Where are those liquidations of shorts always existing on? The next structural impulse that exists. This next structural impulse. Like this area here, like this area here. And when those get ran, all that's occurring is those people that are trying to continuously get positioned short and trying to force that short, because there has to be a reversal. There has to be a reversal. It's so overextended. There has to be a reversal. Then it gets even more overextended. Then it becomes 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 even more overextended, etc., etc., etc. And it repeats until retail finally goes, wait a second, I think this market looks a little bit bullish. And then at that point, we are going to see the beautiful new smart money shifts into the downside, in which case we can begin following them. But until then, this is just an overextended market for retail, and they're all looking to short this at any point they can on a daily chart. These are all huge points of resistance they want to short. They want to short, they want to short, they want to short, they want to short. They just want to keep shorting when the market has done the same thing and has continued to do the exact same thing, and is probably going to continue doing the same thing until it shows us differently, right? Retail wants that short, and they are willing to be wrong 500 times out of the one time that they do predict the correct reversal. We are willing to be correct every single time, and we're willing to be wrong at the very end if a market actually wants to reverse. And at that point, we can change what we might be looking for or our bias. But for anyone that doesn't believe me, you can join up with a mentorship and check out any of the webinars. I've broken down this move a multitude of times. Similarly, if you check out any of the stuff on my YouTube, I've broken this move down, when it was down here, and spoken about it continuing long. I broke it down again when it was here and said that it should continue long. And nonetheless, we have that beautiful delivery. And as a result of that understanding being promoted to you guys, to my mentorship, and to people that are actually trading this specific way, you see stuff like this. So we have one of our funded members up 185 RR on UJ right now. So that's just phenomenal, dude. Congratulations. And it might not look, it might look like it was just out of nowhere, but just to show you guys, this was ever since yesterday. So we'll go right here, like this was yesterday. we had one of our other funded members say, hey, anyone looking for UJ buys over Asia? Because this was all happening during Asia, and then this morning during or last morning, yesterday, I think this morning during New York, right? And we sent out this bias and said, yeah, we should continue to go long and clear out all highs. I actually had my own long. He said, yeah, sweet, have the same thing that I'm looking for. You know, he caught that up from down here and from over here, so he started taking that long. Then we had Sorrow right here take this long from here as well. He didn't get involved in this one, so he was honest about that. He said, I didn't get the second one on. I just put it on as my rules were met. So, you know, he's learning to see his approach develop on certain markets, especially ones that are, you know, overextended like this, or just bullishly delivering and continuing to bullishly deliver. And again, as per my last video, we realize that this bullish delivery doesn't need to make that pullback, right? What's happening is, even though some retail or dumber money is very bullish on this, what they're looking for consistently is that deeper pullback into, right? So a lot of dumber money is looking for that deeper pullback into a resistance, or the S&D down here. A lot of dumber money is looking for that pullback into this area, and as they're doing that, they're getting positioned short with most of their stops around these areas here, but mostly above here. That is why this idea of stop runs exists, right? It's not because we just know that the orders are there, but we understand that from a standpoint of data. And, you know, no matter where you are, even if you're in institution using fundamental data and not looking at charts, what's happening is, into your fundamental reports, you're utilizing the price of the asset over X amount of time. So what happens is, when you do those calculations, you'll find that, you know, a lot of the time their calculations lead them to have a stop protection just above a given data point like this one. And that's how, you know, regardless of whether you're someone that doesn't believe in the candlesticks or the fundamental and just believes in fundamentals, you are still led to the same dumb mistakes, right? And if your psychology isn't there, then you're going to find yourself consistently losing. Now, again, there are retail that are forcing these shorts that are profitable. And what's happening is, you know, they're getting stopped out small. You know, they're getting in, maybe taking even a small profit here of like 1 RR, getting stopped out small, maybe taking a sell here, getting stopped out, maybe minus 1 RR there, you know, and they're just waiting. And eventually, yeah, maybe they will catch their move down and make their, you know, 3 RR for the year, in which case, phenomenal. You know, like, that is one way to trade. But another way is to actually understand that why behind what's occurring, which I teach on my YouTube, as well as on the link below, as you can see on the screen, or even in the description, where we go completely in depth on this smart money side. There's a step-by-step course, you know, tailored towards you. So check that out if you want. Thank you for the sponsor, mentfx. And nonetheless, you know, we're looking for that delivery, and with that why behind it, we're able to, you know, look for the actual setups that are in motion with the trend rather than against. And we usually end up not in this state, right? Same thing goes for EU. Right now, you know, you have 85% of people long on EU. On EU, we've been short ever since. There's no reason to be long. We've been talking about it going short. We've been talking about it continuing short. Even this week in our webinar, we said, yeah, this should just continue short. There's no reason to stop continuing short. You know, we spoke about certain zones. I think at the beginning of the week, we spoke about this 1 hour area here to continuing short, you know, and we had the breakdown, perfect mitigation, breakdown, perfect mitigation, breakdown, no mitigation, which happens, continues breaking down, breakdown, perfect mitigation, continuation, right? And it just continues to deliver and deliver and deliver. And a lot of retail or dumb money is once again trying to find that low, find that low, find that low, find any short-term support, find any short-term support, find any short-term support, and everyone's trying to pile into this long, right? That's why you can't lie with the stuff that literally shows you most of what retail is doing. A lot of retail people are signed up with this, and you know, they're 85% of them are pretty much long on this, right? Where's the longs coming from? It's been short, it has been short ever since, and just to show you guys this, even in the mentorship, ever since this shift right here, let me just double check this to make sure I'm looking at this correctly. Ever since this shift right here, just so you guys know, we've been short on this market and haven't stopped being short on it, right? In the mentorship, we've been short on this market since this break. We've been looking for the continuations, right? And taking that short over and over and over again. And there's been a variety and just numerous setups over and over and over again that could be taken short. So, you know, it's been a beautiful delivery. And the same thing goes for UJ. Ever since that accumulation within those 3 months, you know, we've been long on it, and we still are long on it. There's no reason not to be, right? And you have this kind of thing come as a result of that. You know, we keep going. I took some longs in there too during the day. That was yesterday. I took longs on UJ during Asia. We had this guy that had a beautiful trade just run right into TP. He sadly did not leave a portion to run, so he took 100% off here. You know, it happens. He's learning. He's still in the process of collecting his data properly, as I teach in the mentorship. And again, in the mentorship, I do teach you how to properly collect data, how to properly take data and interpret it, how to properly build out an actual trade plan and a management behind the way that you're going to actually take those trades. I teach you exactly how to view certain things from a standpoint of structure, S&D, and confirm, as well as a numerous a capability to use different confirms based on what you want and what basically what works for you. This is Joya, so you know, the guy that has that trade running at 180 RR or so right now. He got in on this right here, and he's letting it keep run. You can see he took a partial. He left 25% to run until tomorrow. He's not even trailing, you know, and then today, lo and behold, you saw his 1 to 185 RR run now, right? Which again isn't fully 185%. Of course, don't be dumb, don't be new. You know, go ahead, be in the comments, say it's a scam. It doesn't really matter. The point is, we've been long on this market for the last 5 months, and for the last 5 months, has been perfectly delivering to the long side as per that analysis. And even today, you know, you have a number of probably retail or dumb or smart money, or even dumb smart money or retail-based traders that are still getting liquidated on this market, unaware of why it keeps on running higher and higher and higher, continuously trying to catch that high, And once again, it brings you back to the video I just released very, very recently. If you force those longs, it's going short. Similarly, if you're forcing those shorts, which a lot of retail is doing right now because they want to see a deeper pullback, they need to see a deeper pullback. There's no way this price can be this overextended, right? This is how they felt ever since this first impulse that I drew for you guys here. Remember, on a 1 hour chart, that impulse right there looks like this, right? It looks beyond overextended. There's no reason it should continue. And then it did. And then it continued even further, and it continued even further, and now it's continuing even further. And a lot of people want to force and see those shorts, and more likely than not, they're going to be met with the same thing, which are those longs, clapping them, and clapping them. Because there's no reason, there's no data point, there's no structural range that is showing you that price wants to hold short, right? You go to a 3 month, what do you see, right? We can take a look at this. Most recently, the reality of this is, you know, you had this high here, it broke out. Made a new high. That became liquidity. Price came to hit the demand zone of that move. There's a demand zone down here too. Both are valid. Came to absorb that down move, right? Accumulated in it. So that's also part of, just so you guys know, remember that weekly range right here that we spoke about? Notice how that weekly range was part of a move away in displacement from a 3 month area, right? And that 3 month is really what just got liquidated. So not only did we liquidate that weekly range right here, right? But the reason we continued going long is because, once again, we had an inside range that needed to be liquidated, which has just been liquidated, right? So at this point, you know, there could be some actual stalling, but there's no reason to expect it to finally be done until we get like a daily or 4 hour real displacement to the downside, right? With real, boom, displacement, there's no reason to expect that price wants to go short, right? It should just continue doing what it wants to do. And right now, all it's showing you that it wants to do, based on the ranges developed, based on the way that smart money has held those protected ranges and actually bought back into them when price comes near them or below them, is showcasing to you exactly what smart money wants to do. And once again, you're getting that footprint, you're getting that composite man, or Richard Wyckoff, whatever you want to call it. You're getting the composite man showing you his footsteps once again, right? It's showing you over and over again. The same way I spoke about this range being ran and continuing to run is the same reason that this 3 month range is now continuing to run. You know, you go up to a 6 month and you're going to see something very similar, right? You had this high, this low, and price just broke that structure, right? So it's running a variety of liquidity right now, right? There's a lot of liquidity that was built in this market ever since this move, and now it's finally running it. So, you know, there's no reason to keep forcing any sells in a market that is clearly on the buy side, right? There's no reason to force those sells when it's a buying market. There's no reason to force those buys when it's a when it's a seller's market, right? It doesn't make any sense. You shouldn't be looking for those deep pullbacks. So instead, you know, get onto that right side and begin to do your analysis that way, right? If you don't understand, then start to back to some of this stuff, right? And begin to view it. And it's going to take you a very, very far way. Now, again, if you want to surround yourself with people that do this every single day on levels that you probably don't even understand yet, and do things that you haven't even thought about yet, consider joining that mentorship. Otherwise, you know, I don't need you to join. All this is for free. I hope you guys enjoyed it. Check out the link in the description for the best trade manager you can ever use for my mentorship and for the funding. Nonetheless, thank you so much, guys. I hope you enjoyed this video, and I'll see you all in the next one.